an investigation into Apple's App Store, and that's taken 2% off Apple stock, down to 227. Thomas Hayes joins us this morning. Apple's down on this possible China probe. The Europeans may retaliate against big tech, American big tech, for tariffs imposed by Trump. Big picture question, is big tech in trouble, Tom?
Well, it's February, Stu. Buckle up, Buttercup, and get your shopping list ready. I think we've been suggesting to trim your Magnificent Seven as a theme for 2025. And part of that is rooted in this trade issue, but part of it is earnings growth has been decelerating, going to decelerate from 33% last year to 21% this year, but the multiples are still elevated. And you're seeing all this CapEx. You saw it with Alphabet last night. They took their CapEx estimates from 60 billion to 75 billion, and they missed on cloud service revenue. So this is a lot of defensive spending. We have yet to see the return on invested capital for all this CapEx. So I think Mag 7 is going to take a little bit of a breather, and you want to play that rotation theme that began in summer of last year.
Let's take these two big stocks in turn. First of all, Apple. Are they now mixed up in Trump's dispute with China? And if so, are they going up or are they going down some more?
Yeah, I think U.S. stock market exceptionalism has been tied to the Mag 7. The concentration is a third. I do think they're going to be target number one, not only for China, but for the EU has put together this anti-coercive instrument they're readying. If Trump levies tariffs, they're going to hit back with that. Apple has a monopoly with the App Store. They get 30% VIG on every single app, so that's going to be an easy target for some of these foreign governments as tariffs are levied, for sure.
Google is way down. They're spending $75 billion in this year, this financial year, on AI. Do they need to spend so much money when China comes along with DeepSeek and does it much cheaper?
It's an existential threat, and this is defensive spending. I think you've got to lower your overweight to Mag 7. I think you want to take advantage of some of the unmagnificent 493, because the bottom line is go where the earnings growth is accelerating. It's accelerating this year in the rest of the market. Last year was the Mag 7 story. Lighten up just a little bit. If you're in indices, you are overweight Mag 7. You want to start to look at some of the cheaper stocks for 2025 for sure.
Got it. Tom Hayes, thanks for joining us this morning. Big day. Thank you, Tom. Now this,
Thank you.
Demonstrators